Get out now! Japan's $1.2 trillion threat could end the bond market. What if I told you that the entire global financial system is standing on a single, invisible fault line? And tonight, that fault line just cracked. No explosions, no breaking news alerts on mainstream TV, no emergency broadcast, just a quiet threat from one country, holding one asset, $1.2 trillion. And if that asset is dumped, everything you think is safe stops being safe overnight. This is not clickbait. This is not conspiracy. This is how the global bond market actually works. And tonight, we are talking about Japan. Because if Japan moves, the world moves with it. Why Japan matters more than you think. Most people think the United States controls the financial system. That's only partly true. The real system runs on debt, and the real backbone of that debt is the U.S. Treasury market, over $27 trillion worth. Treasuries are supposed to be risk-free, liquid, the safest asset on Earth. They are used as collateral for banks, pension funds, insurance companies, central banks, even crypto exchanges. Now here's the problem. Japan is the largest foreign holder of U.S. treasuries on the planet. Not China, not Saudi Arabia. Japan, around $1.1 to $1.2 trillion. That means Japan isn't just a spectator. Japan is a pillar. And if that pillar shakes, everything above it collapses. Why Japan is under pressure right now? Japan is in trouble, deep trouble. For decades, Japan ran the world's most extreme monetary experiment. Zero interest rates, negative interest rates, unlimited money printing, yield curve control. It worked until it didn't. Now inflation has arrived, the yen is collapsing, and Japanese citizens are being crushed by rising costs. So what does Japan have to do? Defend its currency. And how do you defend a currency? You sell foreign assets and buy your own currency back. And guess what Japan's biggest foreign asset is? Exactly, U.S. Treasuries. This is the nightmare scenario nobody on mainstream media wants to talk about, because if Japan starts selling, they don't need to sell everything. They only need to sell enough. What happens if Japan dumps treasuries? Let's be very clear. Japan dumping treasuries does not mean markets crash instantly. The dollar dies tomorrow. Society collapses overnight. No, it's worse than that. It means rates spike uncontrollably. When treasuries are sold, prices fall, yields rise, and rising yields mean higher mortgage rates, higher credit card rates, higher business loan rates, higher government borrowing costs. This is how financial heart attacks begin. The system is already fragile. Banks are over-leveraged. Governments are drowning in debt. Households are maxed out. Commercial real estate is cracking. Now imagine this. Japan sells. Yields jump. The Fed is forced to intervene, and suddenly, the free market doesn't exist anymore. The Fed's impossible choice. The Federal Reserve has two options, and both are disastrous. Option 1. Let yields rise. If the Fed allows yields to rise, banks fail. Housing collapses. Government interest costs explode. Pensions implode. This leads to layoffs, defaults, recession turning into depression. Option 2. Print to absorb the selling. If the Fed steps in, they print money, buy the treasuries, cap yields artificially. This leads to currency debasement, inflation returning with vengeance, loss of confidence in the dollar. Either way, you lose purchasing power. The question is only how fast. This is not just about Japan. Japan isn't alone. This is the part nobody wants to say out loud. If Japan sells and gets away with it, others will follow. China, oil exporters, emerging markets, even US allies. Because treasuries are no longer safe. They are political weapons. And the moment that trust is gone, the bond market becomes unstable. And when bonds break, stocks don't survive, crypto doesn't survive, real estate doesn't survive. This is the foundation layer. Why this time feels different. We've had scares before. China threatening to sell, debt ceiling drama, banking crises. But this time is different because inflation already exists. Rates are already high. Debt levels are historic. Trust is already damaged. The system has no margin left. This is like revving an engine that's already overheating. Something gives. What happens to ordinary people? Let's bring this home. What does this mean for you? It means savings lose value. Pensions face stress. House prices wobble or fall. Jobs become less secure. And here's the cruel part. The average person won't even understand why. They'll be told, it's temporary, it's geopolitical, it's complicated, but the reality is simple. The debt system is reaching its limit, and Japan is just the first visible crack. The psychology of panic. Markets don't collapse because of numbers. They collapse because of confidence. The moment investors believe this is not under control anymore, liquidity disappears. And when liquidity disappears, prices don't fall slowly. They gap down. This is how financial events become historical events. Is this the end? No, but it is a transition. Every monetary system ends the same way. Too much debt, too much printing, too little trust. What follows is resets, new rules, new winners, new losers. History doesn't repeat, but it rhymes violently. Final warning. If you take one thing from this video, let it be this. The biggest risks are never announced loudly. They appear quietly, in balance sheets, in bond auctions, in foreign reserve movements. Japan threatening to dump treasuries isn't a headline, it's a signal that the world is changing, and the people who survive financial transitions are not the smartest or the richest. They are the ones who paid attention early. If this made you uncomfortable, good. That means you're awake. If you want more deep, honest breakdowns of what's really happening to money, banks, and power, subscribe. Because the next phase of this story won't be explained on the evening news. Don't forget to like and subscribe. Stay calm, stay informed, and stay ahead. This is Felix. See you next time.